Let's take a look at some of the other movers here this morning. Warby Parker, those shares are higher by about 7%. Evercore ISI upgrading the eyewear company to outperform, and the firm saying shares could rally more than 50% as the company's margins and revenue continues to grow here. And shares, reacting positively as we mentioned. You were taking a look at this note, Shauna, and spotted a solid Swift reference. What? She's everywhere.
Right at the top. What
everywhere.
Mark Mahaney sees, he said, Taylor Swift, take your pick. I can see you. I loved it. You said it might have been a bit of a reach, but I like any opportunity when you capitalize on a Taylor Swift reference, especially right now, given all the frenzy. But I'm also a big fan not only of Taylor Swift, but of Warby Parker as well. And I do tend to agree with some of the points that Mark Mahaney is making in this note, just saying the upside potential of this company when it comes to increasing the rollout of contacts, of eye exams. Right now, making up just about 12% of their sales last year. He sees it getting up to the industry average of about 23%. And then that in turn is going to really increase average revenue per user, the ARPU that we know is so important here to these companies. He's also saying that it's an attractive risk-reward setup, and the fact that the company is moving to open more stores, about 40 per year, really has an opportunity there to expand the customer base.
It's been so interesting for Warby Parker because one of the other areas that they've been trying to grow out the business even more so, but perhaps cuts into the more profitable part, is contact lenses.
Yeah.
And contact lenses have been a focus of a lot of the analysts and the commentary out there. But as of right now, at least for Warby Parker getting a positive bid on the day from Mark Mahaney here, I think that signals that perhaps they're able to strike a good balance with this broader ambition. And then because of the deep data troves that they have to be able to select, to your point, and that was mentioned within the note as well, the different regions that they're moving into, knowing where they've got a customer base that they could serve, knowing where they can layer on some of the other optometry services on top of this. I think that's where the data is a significant play for Warby Parker to be able to lean into, as well as many of the direct-to-consumer type of eyeglass wear players in the optometry space. I have used one of the competitors for many, many years, mostly just because I'm cheap, but frugal. Also, thinking about where they're going to continue to kind of grow out their customer base as well. I think that for right now, for Warby Parker, and as they've been able to continue to signal that it's not just about the quality of the frames, because you always see somebody with some swaggy glasses and you say, where'd you get your frames? And more often than not, a lot of people say Warby Parker. I say something different, as I mentioned. But I think a lot of the street perhaps coming around to this broader growth narrative that is still in place for Warby Parker.
Are you going to share where you get your frames?
I go to Zenni. Yeah, this has been talked about a lot. I think Julie also does Zenni from time to time. Yeah.
Okay, I do Warby Parker. I love
it.
Yeah, but I wear contacts. I'm a big contact wearer, which I don't get from Warby Parker. But no, my glasses are. I love them, had them for years. But getting back to this note and what it actually means for investors like you out there, another thing that Mark Mahaney is pointing out is just marketing spend and the reacceleration there and what that could do for e-commerce growth, because we know the company has been struggling really to grow its e-commerce presence, the revenue there. They're projecting year-over-year revenue growth of just about 2% for e-commerce in the fourth quarter and then accelerating from there. And this, of course, comes as Mark Mahaney and the team see a reacceleration in marketing spend of about 8% in the fourth quarter of fiscal 23.